Good morning, this is Trader72 here. Welcome back to my YouTube channel. I hope you are all well for this wonderful Thursday morning in London. It's sunny, it's beautiful, the skies are blue, and I should be playing golf right now because that is my favorite pastime at the moment when it's the days like this. I've just got a brand new set of clubs. I've just had my birthday and I was looking forward to that. But it's all about dedication, and the markets are still ongoing. They're never there. They're always there, never standing. So for you guys, I'm back. Another bit of good news is my Chelsea team won last night. A whooping victory against Villa. Yes, I know most of you will probably berate me for this, but it is. I've been supporting my team for 35 years. I'm an old Chelsea fan. Suffering sometimes, happy sometimes, and again back to suffering sometimes. But we are certainly going through a roller coaster this year with that team of youngsters. I'm not going to go into the politics about the current regime there. I've got some thoughts about it, but that's probably for another channel on YouTube. So welcome back anyway to the morning diary. Let's without further ado go straight to the news. This is just a quick recap this morning on what's going on. Not a lot going on. Well, there is a lot, but not a lot. It's pretty straightforward. So let's quickly check on the opening at the moment. The markets, S&P and Nasdaq, are both in the red marginally. If you're looking at the actual current prices there, 40 points down on Nasdaq and about 169 on the US 30. So I think it's more about the fact that crude oil, as you can see here, has moved up again. And obviously that causes issues with the market, obviously in terms of energy and oil, which obviously is something that everybody uses on a regular basis. So it could be another issue. But at the moment, really on the back end of yesterday, obviously it was a green day yesterday. It was a lovely bounce. The Iranians were back-channeling with the US and the Israelis in terms of peace talks. That obviously reassured slightly the markets. Now, whether or not that will happen, again, it's down to rumours and third parties and whatever else is happening. So I think we should just probably take that with a pinch of salt for now. There was further bombings and from Iran this morning to Israel, and also the Americans taking out one of the boats out from Iran, one of the actual war boats torpedoed, I think it was. And also, the lack of supply from crude oil to especially Iraq now is starting to struggle with obviously various different areas of the world where crude oil is being shipped out of. So let's have a quick look at what else is happening. So obviously that's slightly down. Obviously geopolitical tensions rising with oil prices. So that's obviously put everything back into the red this morning. Investors are moving back into gold and the US dollar. Treasuries are also up by about 4%, the 10-year bonds. So that the bonds, I can explain at some stage the correlation between the two, but that obviously does affect where the stock market goes, especially stocks and shares, or options as we call them. So that's something to look above. The more obviously it goes up, the more it puts pressure on stocks and shares. I will explain the correlation, as I said, later in another video at some stage. So crude oil back up to $84 a share. WTI, which is obviously the American oil, is up 75. So obviously, when we mean escalating tensions, I'm not sure if they're escalating. I think they're pretty much the same. We're now down on the 6th day of the conflict. So I still think that the Americans are kind of predicting that this will go on for quite a while yet. There are still people supporting the old regime, so potentially we could be looking at an extension. I'm still doubtful whether or not it will last that much longer with the amount of firepower that Israel and the US have against a regime that's been pretty much wiped out. But there's still obviously people out there that are causing the tension. So let's see what happens on that side. But for the markets anyway, in terms of that side, we'll see. Third bit of news there, the weekly job claims are coming up. Always worth looking once a week. They tend to turn up, for those of you who don't know. Yesterday we had the ADP payroll, which is the private payroll, which came out quite stronger. So that showed you how resilient the economy is, the US economy is. We've got the payroll farm, which obviously is coming up on tomorrow. That's going to be a key number, so do be aware of that. I can go through that again, maybe potentially tonight's diary or maybe in the morning. But At the moment, we're looking at claims of 215,000. That's what the forecast is. That was last month here, the 212. So it looks like it's going to beat by 3,000. What it means to the markets, well, that would mean, obviously, again, if it was an increase of unemployment claims, it obviously is not a great thing, but does it affect the markets? Potentially, on and off. In the old days, I used to wait for this and wait and see, but I think sometimes it has less of a sway than we think, but still is part of the economy, so some companies will be affected by that, obviously. So that would be it for the news, I think, today. Let's go back to the diary there, and semiconductors moving up, software companies reacting to earnings reports. Broadcom, I think, came out with great results this morning, up, I think, 6% in pre-markets. I don't tend to follow too much the AI stocks as much as some other YouTubers, so you may get better information from them in terms of that side of it. But obviously, good results and good forward guidance, so which helped, I think, some of the tech stocks to be up. So what to watch out for today? Oil prices, geopolitical headlines, bond yields, interest rates, expectations, US economic data coming out. So that's pretty much for the news. Let's have a quick look at my stocks. S&P Global still minimally in the green, 67 quid in the green. Was up by nearly at 450 late last night. It hit one of my alarms and then retracted back. So did my Adobe, which went up to 276 again. But I think if you look at most stocks, I think they've kind of retracted back, obviously, because the markets are in the red at the moment. So that's where we are at with that. Still tracking Visa and MasterCard and Microsoft as my favorites to step into next, or increase S&P Global. I'm not sure yet. I do try to tend to now be careful in terms of my timing of entry point, because I've been burned so many times with that. And so I am quite careful that I'm pretty rigid in terms of when I want to buy into a stock, pending on the support lines. And as you can see with Visa specifically, we know that on average it's at 311 to 312. It's dropped to on a red day in the markets, or for various different news. And we know also that if we look again there, I mean, obviously the lower there 487, but really if you're looking at on average 512 is where the MasterCard. So at the moment, if these two drop to those two entry points, I would certainly be looking at buying in. I've done my research on them. I know what they're about. I know the intrinsic price is around 20 to 25% discount, as I discussed yesterday in my system. So some of you will be aware of this. And Microsoft obviously would be the other one, where it's fallen back as far back as 385 support line, right on that 200-day moving average. It has risen back above 400. So I think if it was to fall back again around that mark of 385, 390, I would certainly be looking at buying in. Another great company. As I said to you guys, every time I buy into a company, a new company, I will do an analysis of why I went into them in terms of the 4Ms, my criteria, and the intrinsic price, and also the research I did on that specific company. So that will be obviously something I will do on a regular basis, unless, of course, I just add to my current position at S&P Global, which, again, a great company at a great price at the moment, I feel, and certainly worth a look at. Obviously, please do make your own due diligence when you buy into a stock. Don't just follow what I say. I think it's important that you guys make your own decisions and your own system. If I can help in terms of why I bought into that, then great. But like I said, please do your own research before buying in. So I think that's pretty much it in terms of alarms. NatWest went off this morning, so I'm tracking NatWest back in the UK stock, obviously under the FTSE 100. Potentially there could be a potential there. Great bank, established bank in England, obviously, especially nationally, but worth a look. Alibaba dropped out this morning because I think one of their main AI people dropped out or left the company, so that kind of took quite a drop, a 2.5% drop this morning, down to 130, now below the 50-day moving average on the weekly chart, and looking like it's kind of pretty much the moment the RSI, I don't normally use the RSI, but the Stoich is down and heavy selling on the MACD at the moment. So it looks like it could even possibly touch on the 200-day moving average, which is a big indicator of whether the stock will move down or up. Anything falls through that line will potentially be a fallback maybe to 100. If it bounces off that line, then you could be looking at bounce back to 150. So again, something to look forward to. And again, as I said, I'm here for small retail investors. I am a small retail investor, and that's where I am at the moment in terms of maybe teaching people that have just started or come into the industry, or people that maybe have had a bit more experience but maybe need further help. So yeah, pretty much that's it from Trader 72. I hope you enjoyed this morning's show. I will be back this evening for a recap on the back end of the US bell going off at local time 2:30 London time GMT, and let's catch up then. It's Trader 72 over and out. See you later tonight.